This simple day trading strategy makes me over $20,000 every single month, and I don't have to actively watch the charts at all. It's easier than scalping, less stressful, and makes you so much more money. So in this video, I'm going to be breaking down this entire strategy from step 1 so that you can finally become a successful trader. In this video, we're mostly going to be talking about a strategy that relies on higher time frames. The reason why is because the lower time frame you go, the more into scalping territory that you get, right? We want to make sure that we're having smooth, clean price action throughout the day. And when you start to get into these scalping time frames like the 5-minute, 2-minute, and the 1-minute, you start to have often moves that like flip on you, something like this, for example, where you genuinely think that this is going to continue going down, and then it fakes you out and goes up immediately. How many of you guys watching this right now have been in that situation before? So this strategy revolves around higher time frame movements. And the reason why is if we start to go down to like this 1-minute strategy where we're scalping here, you're going to get faked out a lot. You'll see moves like this happen where you genuinely think this is going to continue down. You end up failing and then end up getting faked out immediately. You've probably seen this happen to you before if you're scalping, where you think you're going to get a trend continuation. You end up taking a position right here and then it ends up faking you out immediately just to go in the opposite direction. So this strategy is going to be based on a higher time frame. When you get to these lower time frames, for example, the 2-minute or the 1-minute, typically what's going to happen to you is you are falling for these fake moves that you don't really understand what's happening. For example, green, red, green, red, green. You know, we're flipping back and forth, left and right, and so you're probably getting caught in that chop. So to avoid this, we can start to avoid these scalpy movements and go into an actual trading strategy that holds over the long term. For example, let's go to the 1-hour time frame, and this is the time frame where you'll start to see smoother movements and you'll know exactly what direction we're most likely going in. This also allows you to avoid moves where we're just chopping sideways. And so today we're going to talk about the order block strategy. I'm going to break this entire strategy down from A to Z, so that way by the end of this video you guaranteed know exactly how to trade this strategy. I don't want you failing anymore, trying to scalp and just getting caught up in the mess every single time you try to take a trade. On the 1-hour time frame, you want to make sure that you have extended trading hours included. This is really important because with regular trading hours, you're missing a lot of that important data from pre-market and post-market. Go to your extended trading hours, put that on. This chart is now going to look something like this. I'm currently on Apple, so if you want to follow along, you can go on Apple as well. As you can see, the first thing we're going to be looking for is large liquidity moves. Now, what does that mean? Liquidity essentially is going to be the amount of buyers and sellers inside of a candle. So a large liquidity move is going to be something that has a massive amount of momentum behind it. So think of something like this. We have this giant candle right here, this giant red candle that wipes out maybe 6 or 7 candles worth of volume in just one move. Now, what's going to happen when we actually get that massive move? You have to think of this from a very technical perspective. If you are a day trader and you try to get into this position when it starts to just rocket downward, sometimes you're gonna miss that position, and what happens? Your orders don't get filled. There are people with really large amounts of money, let's say millions of dollars or hundreds of thousands of dollars. Let's say that somebody has a $200,000 order that doesn't get filled in this area. What that leaves is a pending order. That pending order needs to get filled at some point. When is this looking to get filled? So this is looking to get filled once we come back and tap into that block of orders, hence the reason why it's called an order block. As soon as we tap into that order, you can immediately catch yourself an entry all the way back down to lows, and this would allow you to catch an entire dollar move on Apple. It's super high confirmation, and you'll have a ton of clarity when it comes to this strategy, so that way you're not having to sit here and focus on the charts 24/7. You're not having to stress out every 2 minutes of whether this trade is actually going your way or not. How do we actually draw these order blocks? Well, the first thing, like I said, go to that extended trading hours. Once you have this large liquidity move, the first thing you want to look for is going to be the candle before it that is in the opposite direction. So let's say that this is a bearish order block that has a massive bearish move behind it. We need to then find the last bullish candle. So that's going to be this candle right here, this green candle that you're seeing right here on my screen. Now, what we need to do, since this is a selling order block, we need to include the sellers. What does that mean? So when you see a wick to the upside, it indicates that we have heavy selling pressure. We want to make sure that these guys are included in our order block. So we're going to grab from the bottom of the candle body to the top of that wick. This has become your order block. So this is a bearish order block right here. As you can see, the more that we retest this, the more that we end up getting a move off of it. And I'm actually going to show you guys in a little bit exactly how to catch an entry with this order block while day trading, so that way it is just picture perfect and easy for you. But first we have this bearish order block. So that is how you draw it to the downside. Now let's look for a move to the upside, right? And we actually have one right here as well. We end up having this massive move to the upside right here that leaves a lot of liquidity left behind in this area. So what we're going to do is we're going to take the last bearish candle before that massive move, and we're going to include the buyers here. This is a buying order block. And so the reason why we're including the wick is because this wick indicates that we have buying pressure. When you see a wick, that means that we're probably going to push in that direction. So for example, here we have 4 massive upside wicks that show that we are looking to go in the upside direction. So we're going to include the buyers here. You're going to grab your rectangle tool and make sure to include these buyers. Once you do that, you can draw that all the way out, and you're going to start to see something really interesting. Look exactly where we reject every single time. Rejection here, rejection here, rejection here, and we might even come back down to this order block to continue testing. What's happening at this point in time is every single time we touch an area, liquidity is being drawn out of this order block. Liquidity is being drawn out. Liquidity is being drawn out, right? So what's happening every single time that liquidity gets drawn out, we are losing the strength of that order block. If this continues to tap this order block over and over again, at one point, it's going to fly straight through it. Think of it like this. For example, if we have 100 people all standing in a room together and all of us start stomping the floor, we have a larger chance of breaking the floor than just one person stomping the floor, right? So if I'm stomping the floor by myself, obviously nothing's going to happen. But if we get a ton of people and all of those people start stomping the floor, we can easily have a larger chance of breaking it. It's exactly what happens here. Again, just to very clearly show you, right? We're still on Apple. I'm just showing you on the 1 hour time frame. As you can see, we have this massive move that ends up coming and changing character to the downside. So strong downside push. Since it's a strong downside push, we're going to find the last green candle, and we are going to include the sellers. So bottom of the candle body to the top of the wick. Once this gets extended out, you can see the picture perfect moment that we reject from that order block and end up making this massive move down. And in fact, we test it twice. So this strategy is insanely powerful. And even then, we can go right here as well, and we can find this order block right here on Apple as well to the upside. So take a look at how every single time I draw one of these order blocks out, it is very picture perfect following exactly what's happening. Based on this order block, we have a massive amount of liquidity coming in, and then we end up pushing out. Coming in, massive amount of liquidity pushing out. But remember, the more times that you stomp on the floor, the more likely you are to break it. So of course, when it goes through 3 times, it's not strong enough to actually hold. And take a look, even if we extend this even further, we end up coming down and retesting it again just to fall even lower. So look at how many reactions we're getting off this order block. It is such a powerful strategy. Now, one thing that you can do when drawing order blocks is, let's say that your order block is just way too big, right? So for example, you have something like this where you have a massive move and you have this just gigantic wick. Realistically, there's no position that you can take inside this that's actually going to make you money, because your risk to reward is just going to be slammed. Even if you were to take this short right here, right, for example, and you set your stop loss above the order block, that would be a 1-to-1 risk to reward. For me personally, I like to aim for like the 4-to-1 area at the most part, and the least that I would go for is like 2-to-1. At a 1-to-1, you're not really getting your money's worth over the long run. So for me personally, right, I want to drop to something like the 15-minute. I don't go lower than the 15-minute, but I will stay at the 15-minute if that's like the absolute max. And what you can see from here is we actually start to get a little bit smaller of an order block. It's not the biggest change, but in some scenarios, you start to get a much different order block. For this scenario, actually, you could even change your order block to right here, because you see that this move encapsulates that large candle and actually can get you a more accurate result. So you have to take some playing around with it to actually see exactly what the order blocks are doing. But for example, this area makes a little bit more sense to me because this giant wick, like this spike of liquidity could have been, due to news. This makes more sense of like a natural movement with a large amount of liquidity behind it. And take a look exactly how we react to this small order block here. So that's the same thing that we're seeing on the 1 hour. You can fine tune it on the 15-minute to make a little bit more sense. You're still looking for those areas of large liquidity, right? So for example, this is the 15-minute. You're still looking for those areas of large liquidity. So here you would go right here and you would draw it from this candle and extend out and take a look exactly where we reject off, right? And so this is becoming a little bit more precise of an order block. Take a look here again. Even if I continue to extend it, look exactly where we reject. We sweep the liquidity here off this order block, and then we push all the way down. Cool. So now you know how to draw these order blocks correctly. What we want to do is now go to the 5-minute time frame and figure out how to actually snipe an entry. What I want to do is by the end of this video, you will have a full understanding of how to take a position with this order block system from start to finish, so that way you have absolutely no chance of failure, right? So we're gonna push to the 5-minute here. Okay, so realistically, what we're looking at when it comes to this order block here is going to be the reaction when we get to the level. So for example, if we see something like this here, where we come down into an order block and we have 3 massive wicks. Look at these wicks, 1, 2, and 3. When you see these wicks, what does that mean? Well, like I told you guys earlier, wicks mean pressure. So if we have a large amount of wicks coming into this order block, we end up seeing multiple bullish candles that are looking like they want to go to the upside. That is showing that we have bullish pressure, right? So that's pushing the stock up. The one thing that I would be looking for in this scenario is going to be some type of confirmation that tells me that we're going to continue to the upside here. And that confirmation would be a break of highs, right? So the fact that we rejected this order block with strength, 3 massive wicks, the next thing that I would want to see is a break of this high right here. That would show me that we were most likely going to continue to the upside. The first target for me would be these highs right up here, or pre-market high, whichever one you feel more confident with. It really isn't that big of a variance, so I just don't care here. But that would be my first target. My second target would most likely be the start of this gap up here, right? So as you can see, you can use different areas of like strong resistance, strong support, or whatever, target system that you use. So as you can see, you can use really key areas of, liquidity. Where are we most likely to reverse at this point? So if we're starting a gap right here to the upside, a lot of chances are you're probably going to reverse in this area. Since we have pre-market highs right here, there's a large chance that you're going to reverse in that area. So what I would do here is set stops below the order block. You always want to make sure your stops are set on the other side of the order block, no matter what. Because here's the deal. If you set your stop loss above the order block, there is such a large chance that even if we come up to break this high, that we come down to retest the order block. Why would you get out here? We're not coming below the order block, we're retesting the order block. So there's still a large chance that this comes back up. And so lots of you guys will most likely put your stop losses way too early just to get smoked on a move that comes down to the order block, tests your area, and then flies straight to your target. So I want you to instead place your stop losses below the order block to actually guarantee the invalidation of the position. And so from there, you can just let your position run and see exactly your first target get hit, second target gets slapped as well. So a beautiful, perfect position from start to finish. And as you can see, perfect position. All we had to do was just figure out the reaction at our order block, find the confirmation that we needed, and then take the position. Now, based on my other videos that you've most likely watched, you can combine things like the EMA and VWAP into your order block strategy. So for example, you see price action is reversing up at this area, a perfect, beautiful move off the order block, breaking in highs, and then a break in VWAP. This gives us even stronger of an idea that we're most likely going to continue in the direction that we want it to continue in. So this is a perfect position from start to finish, quite literally. Here's example number 2. This is with a larger order block like we talked about before. What I would look for here, there's a couple different areas that you can look for. The first would be a rejection out of the order block with heavy strength, right? So for example, you could take something like this with heavy strength outside of the order block. Your stop loss would have to go over the highs at this situation. Your target would obviously be at lows, or the continuation of these lows down here. Those are the 2 areas you could set your target at. Now, as you can see, this is a really good position still. This hits for 2 to 1. So this strategy is a lot more, you take the position and you don't really watch it, because you have stops over these highs. You know that it's going to take a while to get there if it does get there. And so you're holding this position for multiple hours instead of just holding a position for 30 seconds, trying to hope and pray that it goes your way. Now, the third position that I will say is really rare, but something that can happen, is a lot of volatility pushing straight through the order block with strength. It does happen. And so what you'll see is one massive candle that has a lot of strength. This is for you scalpers out there that do like to scalp. You can still use this strategy for, short-term positions as well. So what you can do is set an entry right above the order block, stop losses over the halfway point of the order block. So for example, right here is your halfway point. This is where your stop loss would be. There are some positions like this that do exist, and I will play one right now for you so that you can see a position like that. Now, there's one more really important strategy that you can use. This position here that I took with my mentorship students was over 43% on QQQ, and this is the exact setup that I use. So as you can see right here, if we're taking a look at this position, the first thing that I want you to notice is that we actually have volume pushing all the way through this order block. If you do see a candle that has a massive amount of volume coming into an order block like this, it is safe to assume that we are going to fall through it. However, there are scenarios where we do push through and just reverse straight off of it, right? And we go to the upside from this point on. So to avoid this situation from happening, what I want to do is I want to take this position as soon as we're able to do two things. The first is we need to break lows, right? Remember when I told you guys price action confirmation is key. So we need to break lows to confirm that we're going to the downside. The second is that we need to break the order block. If we can do both of those things in one candle, that shows me that we have enough strength to continue through it. So when I was trading live with my mentorship students, you can see the first thing that happened in my head was, let's look for a reaction at the level. So we see two reactions here, two bullish reactions off the level. But then we see this massive move that ends up just destroying this whole order block, breaking through these lows and having enough momentum to look like it wants to continue to the downside. Second candle breaks lows and breaks the order block within seconds, which allows me to catch an entry right here. We hold this entry for over 30 minutes, make ourselves a solid $1,500 on the day, and have a 40% position on QQQ super easily. This strategy, when perfected, is insanely powerful. As you can see, we take massive positions. We don't have to pay attention to the charts that much because we know exactly where we want this to go. Stop loss is defined. Everything is absolutely perfect from start to finish. And this strategy is utilized by hundreds of my SOA mentorship students daily. So if you want me to personally come in one-on-one into your trading and take you from where you are to $10,000 per month, I've done this with over 400 people now. So if you're interested, click on the link in the description. It's the first link. It's actually going to pop up on the screen as well, so you can see exactly what it looks like. Put in an application and see if you get accepted to join SOA. With that being said, here's a video popping up on the screen that is very, 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 very good. This probably is my best video on my channel. I want you to watch it because it breaks down everything that you need to become a successful trader from start to finish. And with that being said, I don't really have anything else to tell you guys, so I'll see you guys all next week. Goodbye.